Hi, I'm Keith Schaefer. Today I want to tell you about a stock that is one of the hottest areas of the energy sector, and yet it trades at one of the lowest valuations. It has one of the highest profitability of any company I see in the sector right now, and yet not one analyst covers it. And that's because it's a little outside the box. It's something that would take analysts quite a bit of work to figure out, and a little bit of leap of faith to believe that this new trend is going to continue right into 2014. So this company is actually a refiner, and right now it's one of the most profitable refineries in all the United States. So let's just talk for a brief minute about how refineries make their money. So in America right now, refineries are making buckets of cash because there is a huge difference between their input costs, which is the very cheap shale oil that we make in the United States and Canada, and also very low Canadian oil prices because of pipeline constraints. So you see some huge discounts for both heavy and light oil coming out of Canada. And so between that and places like the Bakken, that's got a huge oversupply of oil coming out, the Permian and the Eagle Ford, also big oversupplies, you're seeing refinery margins soar. And so this whole sector is being upgraded right now by all the major banking firms, and they see a lot of profits here for the simple reason that America is not allowed to export crude oil, but they are allowed to export refined fuels. So what that means is oil is hostage to the limited light oil refining capacity here in the United States. As soon as we start producing so much oil that we've displaced all the imported light oil, basically we run up against a wall. And so the light oil price should drop sometime in 2014. But all the refined fuels that these companies make, the jet fuel, the home heating fuel, diesel, they're allowed to be exported. And so they get world prices, which is quite a bit higher than it is here in the United States. So they're all based on Brent pricing. And right now there's anywhere between a $10 and $15 difference between local domestic US prices and foreign Brent prices. That difference is where the refineries make their money. So why isn't any analyst covering this story that I think is just going to do so well into 2014 and right now is producing cash flow like crazy? Because this company is an ethanol company. And before you all click on the off button, I want to tell you, ethanol right now has no subsidies and is incredibly profitable. Refineries who are crying that they don't want ethanol are buying it hand over fist. And right now ethanol inventories are at record lows despite production of ethanol being at record highs. So what we're seeing right now is a huge gap in the market between the price of ethanol and the price of gasoline. And the reason for that is the bumper corn crop that American farmers in the Midwest were able to get off this summer. So in the drought of 2012, we saw corn prices spike to over $7 a bushel, and ethanol companies' profitability soured. They went due south, and a lot of the companies had very hard times in 2012, and the market remembers that. But what's happened now is with a bumper corn crop, over 93 million acres were planted in 2013, and there was over 150 bushels per acre brought off. So you're seeing a fantastic corn crop that's lowered prices down to just over $4 a bushel. And what that means for ethanol companies is incredible profitability. In fact, there is so much corn around that next year's crop would have to be a complete disaster for it not to stay low prices for the next 2 years. So I see 8 quarters here of absolute fantastic profitability for this sector. And this company right now is making so much money. In fact, I've got a little chart here that I'm going to show you with the margins on this company's profitability right now. I'm going to put my finger up to what's happening right now. Right there. Profit margins are soaring. This is a 5-year chart of this company's profit margins, and it's hitting all-time highs right now. I think this company is going to do incredibly well. My subscribers have already seen a 50% jump in share price shortly after we bought the stock, simply because the market started to catch on to how much money this company was making. It trades at less than 1 times cash flow. It has the possibility of trading at less than 1 times earnings right now if it makes as much money as I think it will. Now is the time to buy this stock. It's just come up above its 50-day moving average. It's holding, and the market is starting to understand how much profitability is in this sector. This company's peer group trades at 10 to 15 times earnings. This company is now trading at 1x earnings, and it is incredibly profitable. Management has really turned the company around, and I expect great capital gains for my subscribers in 2014. It's going to be one of those stocks where you're going to say, I can't believe I didn't buy that when I was told back at the Christmas time of 2013. It's a great stock to start and test drive my oil and gas investment bulletin service. We're only going to be allowing a limited number of people into the service today, so I urge you to act now and get on board. Please click below on the button that you'll see on your screen.